More Money Than God. Hedge Funds and the Making of a New Elite by Sebastian Mallaby. A dark smoke-filled room, a mahogany desk cluttered with stacks of money, the soft clinking of ice against the crystal glass, the hum of stock tickers in the background. Shadows flicker against the walls as fluorescent numbers dance across multiple screens. A leather-bound notebook sits open, pages filled with scribbled calculations, charts, and cryptic annotations. Imagine making $1 billion in a single day. No factories, no employees, no assembly lines, no storefronts. Just numbers on a screen, shifting, twisting, multiplying. A single well-placed bet, the right trade at the right moment. And in an instant, your name is written into the history of money. This isn't a movie. This is the true story of hedge funds, the secretive, high-stakes world where the right decision can make you a legend and the wrong one can erase you overnight. The hedge fund titans don't panic. They don't sweat. While the world crumbles around them, they see opportunity. They make the call, pull the trigger, and walk away with fortunes most of us can't even imagine. They don't just make money. They move markets. They shake governments. They break entire economies. Act 1. The Birth of the Hedge Fund. 1940s, New York. Steam rises from the streets. Newspaper boys yell out the latest headlines. Men in fedoras and wool coats rush past neon-lit brokerage houses. The clatter of typewriters echoes through dimly lit offices as stock prices are scribbled frantically onto chalkboards. The story begins with one man, Alfred Winslow Jones, an unlikely Wall Street pioneer. He wasn't a banker, a trader, or even an economist. He was a journalist, a sociologist, a man who spent years studying human behavior, trying to understand why people do what they do, and more importantly, why they do it with their money. In 1949, Jones had an idea that would change the game forever. He saw what others didn't. That markets weren't just driven by data or company performance. They were ruled by fear and greed, by irrationality and overconfidence. And if you could predict those emotions, you could profit from them. It was a revolutionary concept. Instead of simply betting that stocks would rise like traditional investors, Jones introduced a two-pronged approach, going long on stocks he believed would rise and short on stocks he expected to fall. It was a way to make money in any market, bull or bear. And thus, the first hedged fund was born. But Jones's creation was just the beginning. He planted the seed, but the real money would come decades later. The markets would evolve. The players would change. And the hedge fund titans of the future would take his idea and turn it into something far more powerful. Jones built the foundation. But the men who followed, they would take hedge funds to a whole new level, making not just millions, but billions. And they wouldn't just play the game. They would change the very fabric of global finance. Act 2. The billion-dollar bets. 1992. The streets of London. A British flag waves in the wind. A man in a trench coat smirks as he dials his phone. The cold autumn air swirls around him as he lights a cigarette, exhaling a slow, deliberate stream of smoke. The Thames glistens in the distance, and beyond it, the towering buildings of the financial district hum with the pulse of global trade. One of the greatest trades in history happened in 1992. The world watched, but only one man truly saw what was coming, a Hungarian-born investor named George Soros. The financial world knew his name, but after this day, history would never forget it. Soros wasn't just another trader. He was a master of global finance, a man who had spent his life studying how governments and markets danced together, and more importantly, how they could be manipulated. He looked at the numbers, at the policies, at the cracks forming beneath the surface, and he realized something that no one else did. The British pound was dangerously overvalued. At the time, Britain was part of the European exchange rate mechanism, a system meant to stabilize currencies. The government was desperate to keep the pound strong, propping it up with interest rate hikes and foreign reserves. But Soros knew something fundamental about the market. When governments fight against economic reality, reality always wins. Soros on the phone. His voice is calm, confident. Soros, bet against the pound. Everything we have. It was a bold move. A $10 billion bet. If he was wrong, his fund could collapse overnight. But Soros wasn't wrong. The UK government fought back, pouring billions into defending the currency, raising interest rates to absurd levels. But it wasn't enough. The pound crumbled under the pressure. In a single day, Soros pocketed $1 billion. The Bank of England had been beaten at its own game, forced to withdraw from the ERM in disgrace. It was one of the most dramatic collapses in financial history. And Soros? He became the man who broke the Bank of England. But Soros wasn't the only one who could see what others missed. Fast forward to 2007, and another financial genius, John Paulson, was about to make an even bigger bet. A bet so massive, so controversial, that it would redefine the rules of Wall Street. America was in the middle of a housing boom. Banks were handing out mortgages like candy, bundling them into securities and selling them off as safe investments. The stock market was soaring. But Paulson saw the truth. This wasn't a boom, it was a bubble. And bubbles always pop. Paulson on the phone, his voice steady, deliberate. Paulson, we need to short the housing market. Every subprime mortgage-backed security we can get our hands on. Shorting the housing market? It sounded insane. Real estate was supposed to be rock solid. But Paulson ran the numbers. He saw the defaults rising, the cracks forming. He knew it was only a matter of time before the whole thing came crashing down. And then it happened. The housing market collapsed. Banks failed. Millions lost their homes. The global economy spiraled into chaos. But Paulson, he made over $4 billion in a single year. The biggest financial heist without breaking a single law. 2 men, $2 billion trades. 2 moments in history where the world's greatest investors didn't just predict the future, they shaped it. And in the world of hedge funds, that's what separates the legends from the rest. The game is ruthless, the stakes higher than ever. But for those who know how to play it, the rewards are limitless. Act 3. The downfall and the comeback. But every rise has its fall. And in 2008, the fall wasn't just steep, it was catastrophic. The market collapsed, the housing bubble popped, the entire financial system shook to its core. It was a crisis of greed, of blind confidence, of institutions too big to fail, and too arrogant to see it coming. Lehman Brothers collapsed. Wall Street's mightiest firms stood on the edge of destruction. The biggest banks, the titans of finance, were drowning in bad bets they had once called risk-free. And hedge funds, they weren't immune either. Some lost billions overnight. Clients panicked. Investors pulled their money. Governments cracked down. The golden era of hedge funds, the untouchable giants, the unregulated risk-takers, seemed over. And yet, hedge funds survived. They adapted. They evolved. The weak funds vanished, but the strong, they found new ways to win. In the rubble of the financial collapse, they discovered opportunity. They saw the cracks in the system before anyone else. And they did what hedge funds do best. They bet against the herd. 2010, a sleek boardroom. A hedge fund manager leans back in his chair, a knowing smile on his face. A new strategy unfolds on a digital screen. Quantitative trading, AI-driven funds, cryptocurrency investments. The game had changed. The old rules no longer applied. Hedge funds stopped playing by the book and started writing their own. They used algorithms to outmaneuver Wall Street, machine learning to predict market swings, and global reach to invest in places no one else dared to touch. Today, they control trillions of dollars. They move markets. They topple currencies, they influence governments, their trades can shake entire economies. And they do it all from the shadows, unseen, unstoppable. They are the new elite, richer than the Rockefellers, the Carnegies, even the Morgans of old. But they don't build railroads, they don't own steel empires, they don't mine for gold, they don't have to. They trade money itself, shaping the world with nothing more than numbers on a screen. They are the ultimate players of the financial chess game, and they always have one goal: more money than God. Act 4. The future of hedge funds. The game is changing. What was once ruled by instinct, by gut feelings and whispered tips over martinis in private clubs, is now dominated by something far more powerful: algorithms, speed, data. Hedge funds have always thrived on being ahead of the curve, and in the age of AI, they're rewriting the rules once again. No longer relying on Wall Street legends or high-stakes gambles, today's hedge funds are driven by artificial intelligence that can predict market moves before they happen. A fraction of a second, that's all it takes. A micro-trade executed at the perfect moment. A machine learning algorithm spotting a weakness in the market, billions moving invisibly across the world, faster than any human could ever dream. The Wolf of Wall Street has been replaced. The new kings of finance don't scream into phones, they sit behind screens, commanding an army of bots, their fortunes built on lines of code. But one thing remains the same: money never sleeps. So the next time you hear about a financial crisis, ask yourself, who's really pulling the strings? If you enjoyed this deep dive into the world of hedge funds, don't forget to like, subscribe, and hit that notification bell. Let us know in the comments, would you trust your money with an AI-powered hedge fund?